Welcome to today's webinar, High Limit Disability Insurance. I am Tom Petersen, your host for the next 4.5 hours. No, just kidding. We know your time is precious and we do plan to keep this presentation to well under 30 minutes. We will not have any live questions and answers, but we do encourage you to contact us after the presentation should you have any further questions. Before we begin, I want to provide a short, shameless plug about Petersen International Underwriters. For over 35 years, Petersen International Underwriters has been working with insurance professionals around the world. We are licensed in all 50 states and even other countries. We are a Lloyd's cover holder, which means we design, underwrite, and issue various unique coverages. We have 4 key divisions including disability insurance, life insurance, medical insurance, and then our special risks or contingency plans. Our programs are designed to fill in gaps when the traditional insurance markets can't or won't do something for you. Today, we want to focus on high-limit disability insurance. Now, what is high-limit disability insurance, you say? Well, we've put together a very short video that summarizes this question very well.
What is high-limit disability insurance? High-limit disability insurance is supplemental disability insurance for anyone with compensation greater than $150,000. Coverage is designed to enhance group LTD and individual DI benefits by layering additional benefits to bring an individual to 65% of total compensation. Financial experts recommend monthly DI benefits of at least 65% of income as being the minimum amount for adequate financial protection. But as incomes increase, traditional group and individual DI carriers lower the percentage available. With incomes growing larger than what traditional group and individual DI carriers will issue, highly compensated individuals turn to high-limit DI coverage to protect their incomes and their financial security. To illustrate the value for high-limit DI, let's look at a real case from our files. Dr. L was a successful physician in Wisconsin. Dr. L and his financial planner completed a comprehensive financial review, and they discovered a disability insurance deficit in Dr. L's insurance portfolio of $49,000 per month. Dr. L had an income of $1.3 million and had traditional group and individual disability insurance in place with a total benefit of $21,400 per month. Now, based upon the 65% rule, Dr. L should have $70,400 per month in disability benefits. At a current coverage of only $21,400 per month, the financial planner then projected the losses over a typical disability claim period. The losses amounted to $588,000 in year 1, $1.7 million over 3 years, $2.9 million over 5 years, and almost $6 million over a 10-year disability claim period. Now, with so much at stake, Dr. L decided to purchase a high-limit disability policy. Sometime into the policy period, Dr. L unfortunately suffered a laceration and nerve damage to his dominant arm and is now unable to perform surgery. Each month, Dr. L receives benefits from 3 disability insurance policies. $15,000 from his group LTD policy, $6,400 from his individual DI policy, and $49,000 per month from his high-limit DI policy. High-limit disability insurance is important to all high-income earners as it protects the assets they've built. It protects their savings from erosion due to the disability, and it maintains cash flow to allow them to continue with the living expenses. Regardless if someone is a conservative spender or an extravagant spender, their family's lifestyle depends upon a certain level of income just to maintain what they have. High-limit disability insurance prevents liquidating savings or assets. The extravagant spender enjoys making acquisitions, spending the majority of their income on various things such as real estate, fancy cars, yachts, and even private aircraft. The more modest spender usually has long-term goals, building a sizable savings account, stock portfolio, retirement fund, college fund, or even legacy fund. Either way, for these individuals, monthly cash flow is important for financial survival. Without high-limit disability insurance, highly compensated individuals will not be able to economically protect their family or achieve their life goals. For more information about high-limit disability insurance, call, click, or email today to find out how Petersen International Underwriters can be the solution you've been looking for.
High-limit disability insurance has been around for quite some time, and there are many myths and truths about such coverages that we would like to share with you for a few minutes here. The first is a truth. Regardless of income levels, people spend most of what they make. There are two third-party surveys that I wish to share with you today. U.S. News & World Report did a demographic study of their readers. Now, most magazines do this so that they can approach their advertisers to demonstrate who reads their magazine. What they found was, get this, regardless of income level, people dedicated about 40% of their income to the mortgage of your house. Notice I did not say a dollar amount, a percentage. Now think about it. Picture in your head a house that is owned by someone who makes $100,000 a year. You got that picture in your head? Good. Now imagine a house that is owned by someone who makes $1 million a year in income. Did that picture of the house in your head get bigger suddenly? The dollars get bigger, but the percentage stays the same. Now, continuing on with that specific survey, we find that at least 25% of income is used for all those minor things. Now, you know what those minor things are. We call them food, bills, such as utilities, clothing, whatnot. Now, a second survey to share with you was done by the U.S. Bureau of Labor Statistics. 73 million people sampled. I'd say that's a fair size sampling. Now, although it was done for completely different reasons than the U.S. News & World Report, they found, are you ready for this? A bit over 35% of income was dedicated to the mortgage of the house, regardless of income level. Now, that same sampling found that the things like food and utilities took about 35% of a person's income. The bottom line, regardless of income level, most people need about 65% of their income just to stay alive. That's to survive, not to thrive. Third-party experts agree, as we saw from the two surveys we just shared with you, that about 2/3 of income is needed just to stay alive. Financial experts use these same statistics to illustrate protecting 2/3 of income. Our own insurance industry uses 2/3 of income as a general rule of thumb. Group disability insurance quotes are often either 60% or 2/3 of income. If you have studied disability insurance through the Registered Health Underwriters, LUTC, Disability Insurance Associates, the American College, or any of our insurance training institutions here in the United States, they all generally use 2/3 as the minimum needed for adequate financial protection. There is a reason for this. They did not just make up these numbers. It is based upon statistics, both within and without our own insurance industry. A common myth is that high-income earners have lots of excess cash. Remember that these same people consume 2/3 of their income just to stay alive. That means that their disposable cash is 1/3 of their income. Now, that disposable income is what they use to build assets and a specific lifestyle. This includes investments, boats and travel, and additional homes. Isn't one of the purposes of having insurance is to keep your lifestyle and not have to reduce it or change it altogether? Ask your client who questions the need for disability insurance this question. If you encounter an illness or an accident that disables you, which asset, pick one, which asset do you wish to start selling off first? And then pick the next asset, and then the next. The truth is, financial planning begins and ends with income planning, and you cannot have income planning without protecting the very source that makes the entire picture work, the paycheck. If you are working with a client and offering financial protection advice, the addition of disability insurance is crucial. At the same time, another critical word comes into this discussion: adequate. Adequate amounts of income protection is 65% of income. Group disability insurance will cover 2/3 up to a limit. It caps at some point. And it does not include contributions into pension plans, bonus income, or other sources of income, just the base salary. Individual non-can policies do a great job for most people, but they too decline in percentage as a person's income goes up. Adding a high-limit disability plan keeps the protected income up to the adequate amount of 65%, regardless of the income level. Adding high-limit disability insurance will compromise my primary sale. Oh my! First, stop projecting your fears into your clients. You see, most people appreciate hearing a full game plan. That's what they came to you for. They have asked you for your professional advice. Do you expect a doctor not to prescribe the pills so that they can do the operation? Like a doctor, you're prescribing a complete program, which may take one policy or multiple policies. Budgeting is the second part of the discussion, not the first part. The real truth is that showing your clients a complete and full arsenal of protection will often stimulate more sales. Sometimes producers look at the commission as being so low that they don't want to bother. While the percentage is smaller than a traditional disability policy, and even more so compared to a life policy, there are some key points that you need to consider. First, most of the time, high-limit disability insurance is sold as part of a package and not a single sale item. Thus, it is additional commission on top of the coverage you were already going to sell or promote. Secondly, remember, we mentioned that providing a client a thorough plan of coverage often triggers more sales, and that is a fact. Third, your image. In the face of your client, showing a thorough plan of coverage, you raise your professional image and add referral credibility to the picture. And lastly, premiums for these types of cases are often larger than normal, and thus on a percentage basis may be smaller than a traditional disability sale, but the actual dollars in your pocket are often far higher. Oh, and did I mention renewals? Our renewals are level for as long as the coverage remains in force. Woohoo! While we describe these types of coverages as being for high-income individuals, sometimes we imagine that we are talking about billionaires. The reality is that there are many people who have an income that can use excess coverage. Even income of about $100,000 per year has room for high-limit disability coverage. However, we do find that about $150,000 per year is where the income is high enough and the benefit offered by the traditional group and individual markets starts dropping on a percentage basis to where a client can actually see a need for the extra layer of coverage. Thus, we use $150,000 of income or higher as a trigger point. $150,000 a year of income is not an incredibly high number. If you look closely at your current book of business and spend time with future clients talking and delving into, you will find that many clients that have a need for high-limit disability insurance are already around you. Our office each day gets calls from producers who start out saying, I have a guy who, and fill in the blank. And you would be amazed at who makes a healthy income besides the top executives, entertainers, and pro athletes, which we do as well. Martial art instructors, body fabricators, tuna boat captains. Did you know that tuna boat captains make over $250,000 a year in income? It's not about driving a boat. Most anyone can do that. It's about knowing where the tuna are. Watch The Deadliest Catch on television and you'll see how they have to have knowledge of the sea life and the environment in order to make money. And when they do, they make a bundle. We hope that this brief introduction was helpful and encourages you to add high-limit disability insurance sales into your daily routine. As I noted at the beginning, please feel free to contact us for questions or to ask for a kit with information. We also have a lot of information on our website that may be useful. Also note that if you liked our video, we can custom design the tag at the end to have your contact information and remove the references to Petersen International Underwriters. If that would be of any interest to you for your website, please let us know. Lastly, next month we will have another 30-minute chat focused on the 4 tiers of disability insurance sales. Most producers only sell Tier 1 and Tier 2. Tune in to find out what and how to use Tier 3 and Tier 4 for more sales. Enjoy your day, everyone, and thank you for your time.